Hi, this is Kelley Wright at the Money Show in Dallas. With me, Mr. Neil George. Profitable investing, among other things.
Thanks for having me.
It's always a pleasure. You and I kind of fish from the same pond sometime.
Yes, we do. We tend to focus on a lot of the value parts of the marketplace. Like to focus on income, dividend flows, some of the sort of the drier parts of the marketplace.
Yeah, we kind of like to want to know how we're going to get paid.
Exactly. I come from the old banker background in which every transaction that I was setting up, the number one question I had was how am I and my banker going to get paid?
Exactly.
How are we going to get the money back?
But you know what? That's not a bad way to approach what we do in the investing world. It is a business after all, investing.
Yes, one of the things that I'm also reminded by when I do talk about my banking background is that there are a lot of individual investors out there that don't necessarily still like banks. They still remember 2007, 2008.
Well,
and my publisher also wants to sort of have me dial back some of my banker habits.
Oh no, we're brothers from different mothers. I feel you. Okay. Yes.
But the key thing I guess I wanted to remind people about is we've had some volatility in the stock market, the bond market this week, and there's been some concerns about whether or not we're coming to the end. We've had such a great run in the stock market. The bond market, of course, the treasury markets has seen over the past year a backup in yields in the short and long term, less so in the long term. And people are saying, well, is this as good as it gets? And are we already starting to see a decline? And I like to remind people, I said, let's look at the underlying fundamentals of what drives the market, the underlying economy.
Okay.
And we had the jobs number for the prior month, of course, as Fridays bring them, and a good solid number of new jobs.
Sure.
Additional ones in the revision. We have wages running very nicely at 2.8%, and the unemployment rate.
It's been a long time since wages have shown any growth.
Well, but see, that's really not accurate. People are people are complaining that the wages are been growing at only 2.8%, but that's an advance of where we were earlier in the year when we were only at 2+%. And you have to remember that the underlying core inflation, as measured by the Personal Consumption Expenditure Index, is still under 2%. So you have real wage growth that is occurring.
Okay.
And so that's really all you want. You don't want to see wages growing at 3, 4, 5% because that would signal that we do have
a lot of inflation.
And then you start seeing that show up in turn with the PCE index, that inflationary measure that I and the Fed use, and therefore you'd start to have some further problems. So we have some good growth. We don't really have inflationary pressures.
Okay.
But more importantly, since you talked about the wage part, I like to look at one of the things is the amount of consumer consumption. That's been the big driver. It's the majority of the economy, representing 2/3 plus.
Right.
And consumer spending continues to be in an upswing. You look at retail trade in the United States, which is tracked by the census and so forth. That is a good broader measurement of overall retail. That's been growing at a rate of 6 to 7% monthly.
That's pretty healthy.
And that's very healthy.
Yeah.
And businesses recognize that. And because you look at business capital spending has been up dramatically. And moreover, the longer term commitments by business in fixed capital that the BEA looks at.
Right. Even more important.
That is currently advancing on a quarter-over-quarter basis in the 8% range.
Wow.
So
those are big numbers.
Those are big numbers. So you have consumer spending, businesses recognize they're investing to capitalize on that. But that's in the past. So what I also like to draw people's attention to is the future.
Right.
And therefore there are two surveys I like to draw people's attention to.
Okay.
One is on the consumer side, and the one a lot of people look at is the Michigan Confidence Survey.
Right.
I like to look at the survey that Bloomberg does. It's called the Bloomberg Consumer Comfort Index.
Okay.
I call it the Comfy Index.
The Comfy Index, okay.
It's weekly, it's much broader, and for the past week, it just hit a high that they haven't seen since 2000. And then the other one I like to look at is the Fed does, the Fed Bank of New York, their specialty is looking at business leaders and so forth. They have their surveys for capital spending and fixed capital projects that are being budgeted. So they call it their leadership index, and they have different segments, both for capital spending and fixed capital spending, budgeted for the coming next several quarters. Extremely positive sentiment surveys. So that tells me from both those surveys, consumers are very confident in their personal financial situation. They see they're going to be spending more. Businesses see that, they're comfortable, and they're budgeting to spend more over the coming quarters. That's all good for the economy, and in turn, that means that the general stock market has some room to grow.
Okay.
And so then with that, I like to look at, with the market, the S&P, we've seen a good run up, as well seen.
Indeed.
And the key thing, people saying, well, is it getting too heated? I said, no. What you really want to look at is what's the underlying value growth in the underlying assets of the S&P.
Okay.
So you look at book value. It's something real simple. And you would think book value would be steady, and then the stock price is just going up, and you'd have a higher price to book rate. But you actually are seeing over the past year some pretty steady growth in underlying book value for the S&P 500 companies. So we already know we've got revenue growth. Everyone looks at that,
right?
But you're also seeing that the actual assets of these companies is actually growing. And so with that, this ongoing march upward in prices does have some really good justifications, in my opinion.
You're talking about some real world stuff here, which is kind of a breath of fresh air because there's a lot of noise.
Yeah, no, I don't like the noise.
I don't like noise either.
I basically like to look at the facts and figures and have a rational approach to seeing where the value is.
Yeah, noise confuses people. This is good stuff.
And it can also be upsetting for people trying to get through some changes in the marketplace.
Absolutely. See, folks, this is what a nice, rational discussion about the market should look and sound like. Always a pleasure, my friend.
Thanks very much, Kelley.
All righty. This is Kelley Wright at the Money Show in Dallas. Thanks for joining us.